Bitcoins are about to be cut in half. Huh? Yep, the third Bitcoin halving event is coming up tomorrow, May 12. I'm Kalila Reynolds and I'm about to tell you what that means and why it's a very big deal. This is Money Mondays JA, brought to you in partnership with Proven Wealth. Now, before we get going, just a reminder to like this video so that YouTube shows it to more people. Subscribe to this channel, and if you find anything useful in this episode, please share it with a friend. Also, turn on those post notifications. Now, let's get to it. A lot of you have been asking me about Bitcoin, and there's a lot to explain here, so pay close attention. Now, Bitcoin is a currency that only exists in the digital world and not physically. You can't hold Bitcoin or put it in your physical wallet. However, you can acquire a digital wallet that stores your Bitcoin there. Think of the concept of money like this. I have a patty. My friend wants a patty, so I give my friend the patty. Now I don't have a patty and my friend does. Simple enough, right? But with digital money, it gets a little bit more complicated. I have a virtual patty. My friend wants a virtual patty, so I give my friend my virtual patty. But how does my friend know that I actually owned the virtual patty that I gave them? And can't I just copy and paste the virtual patty to make two virtual patties so that I still have one after the transfer? Well, with digital currency, it's important to have protocols in place to prevent people from spending what they don't own or making copies or simply undoing transactions. Bitcoin uses a system called cryptography that tracks transactions and prevents the creation of new coins by unauthorized parties. So Bitcoin is what is called a cryptocurrency. With me so far? There are many types of cryptocurrencies, but in today's episode, we'll focus on the most popular one, Bitcoin. Now, the purpose of Bitcoin is to promise secure online transactions at lower fees than traditional online payment mechanisms. All Bitcoin wallets are required to use a global database called the blockchain. The blockchain keeps track of new Bitcoins as they're generated. Simply put, the blockchain keeps track of who has how much Bitcoin at all times. Each Bitcoin address has two important keys, a public key and a private key. Now, the public key, which is what the Bitcoin address is created from, is similar to an email address. Anyone can look it up and send Bitcoins to that address. The private key is similar to an email password. Only you know it, only you can use it. And this is used to sign transactions, providing proof that the Bitcoins came from the owner of that wallet. Because of this, it's very important that this private key is kept secret. All transactions are broadcast to the blockchain without revealing the private key through a process called mining. Now, Bitcoin mining makes it possible to trace the history of all Bitcoins in existence. And you may be asking, so why should I use Bitcoin instead of just using my credit card for a transaction, for an online transaction? Well, the basis for having this cryptocurrency is to cut out the middleman, the banks. Every purchase we make online goes through a bank or a credit card company that takes a cut of each transaction that we make. Now, taking it back to Bitcoin acting like a virtual patty, I can send and receive virtual patties from my phone or laptop without going through my bank's app or website. Not only that, but the difference between using Bitcoin and using regular money online is that Bitcoin doesn't link to any sort of real world identity unless someone chooses to link their name to a Bitcoin address. It's hard to tell who owns the address. Bitcoin doesn't keep track of users, it keeps track of addresses where the money is. No personal information displayed, no chance of fraudulent activity affecting your account. The Bitcoin system was established in 2009 by an anonymous person who called himself Satoshi Nakamoto sounds Japanese. Analysts aren't even sure if it's a man or a group of persons, but Nakamoto created this new type of currency that allows users to buy bitcoins, trade bitcoins for goods and services, or mine bitcoin and store it for a rainy day. Now, you can't just buy an unlimited amount of bitcoins because there will only be 21 million bitcoins generated ever. So far, about 12 million have been generated and mined. The value of the bitcoin then becomes the major factor. Bitcoins have value because they're useful as a form of money. It has the characteristics of money: durability, portability, scarcity, divisibility, and recognizability. In short, Bitcoin is backed by mathematics. With these attributes, all that's required for a form of money to hold value is trust and adoption. In the case of Bitcoin, this can be measured by its growing base of users, merchants, and startups. As with all currency, Bitcoin's value comes only and directly from people willing to accept them as payment. Now, the Bitcoin trend continues to grow every year. Following the inception of Bitcoins in 2009, it only took 3 years before gaining the attention of mainstream media. The price of Bitcoin is volatile, ranging from less than $10 in 2010 to just under $20,000 in early 2018. The price now hovers around $10,000 per Bitcoin. This overall price increase has produced a handful of Bitcoin billionaires. Some investors simply want to purchase Bitcoin, and once they own it, they store it securely for the foreseeable future. The goal here is that the Bitcoin will appreciate in value, and if this happens, you can sell your Bitcoin for a profit. However, there is no way to predict whether the Bitcoin you buy will actually increase in value. I'll give you an example. About 5 years ago, I had the opportunity to buy some Bitcoin. I had interviewed this gentleman who had created a Caribbean version of a Bitcoin wallet. Well, I never did take up that opportunity, and later that year it had something like tripled in value, and then it came back down after that. So yeah, it can be volatile. If you invest in Bitcoins, make sure that you keep up to date with industry news and know your standing, just as you should with any other type of investment. Now, since there's no way to predict the market, it's wise to trade with caution and be aware that there are never any guarantees of making a profit. The goal here is to buy when the price is low and sell when it rises. The growth of Bitcoin has not only benefited consumers, but also many companies such as clothing websites and bars. Some colleges have even accepted Bitcoin as tuition. Now, Bitcoin creator Nakamoto created a way for Bitcoins to be distributed without a person or group of people deciding who should get them. Now, let's take a look at this image on the screen. When Bitcoin started in 2009, the reward was 50 coins per block. But Nakamoto put in a protocol where every 210,000 blocks, or roughly every 4 years, the reward would be cut in half. And this is what is called Bitcoin halving. The first occurred in 2012, where block number 210,000 rewarded 50 coins to the winning miner, but block number 210,001 rewarded only 25 coins per block. The second halving occurred in 2016, where the block number 420,001 rewarded 12.5 coins to the winning miner instead of 25 coins. This year, the halving is scheduled for tomorrow, May 12, and the reward will be cut in half once more to 6.25 coins to the winning miner of block number 630,001. And this will continue until the total supply of 21 million Bitcoins have all been mined. So why do this halving event? Is it really fair to the Bitcoin miners? Why not keep the reward the same? The answer to these questions lies in the law of supply and demand. If the coins are created too quickly and there's no limit to the number of Bitcoins that can be created, then eventually there will be so many Bitcoins in circulation that they will have very little value. Think of Bitcoin like gold. There's only a limited amount of gold in the world, and with every gram of gold that's mined, the gold that still remains becomes harder and harder to extract. As a result of this limited supply, gold will maintain its value as an international medium of exchange and store value for thousands of years. The hope is that Bitcoin adopts the same quality. If you look at this other graph on the screen, you'll see the pricing trends surrounding the previous Bitcoin halvings. In the first Bitcoin halving in 2012, Bitcoin appreciated by 34% from $9.50 US to $12.75 in the 4 weeks leading up to the event. Bitcoin underwent its second halving on July 9, 2016. On that day, it was trading near $660 US, representing over 45% gain on the low of $440 observed in mid-May. This year, the Bitcoin value has risen by over 130% since bottoming out at $3,867 US on March 13, according to CoinDesk's Bitcoin Price Index. The cryptocurrency jumped from $6,700 US to $9,400 in the last 10 days of April alone. But don't get too excited just yet. Bitcoin halving will reduce the amount of Bitcoins awarded to miners, reducing the supply of coins entering the market. Now, not only does halving boost the price as a result of the added scarcity, but the additional media attention, like Money Monday's JA, and the positive impact this has had on Bitcoin prices historically will drive up demand. The halving event is set for tomorrow, May 12, and while some analysts expect Bitcoin to chart a similar upward trend following the supply cut, investors should note that the previous upward movement did not start immediately after the halvings. Now, in this time of job uncertainty and pandemic panic, you may be wondering if and how you can invest in Bitcoins and earn your piece of the pie. Well, there are many options available to a beginner in the cryptocurrency world. To attain Bitcoins, the first step is to download a Bitcoin wallet app on your phone, laptop, or tablet. It's as easy as setting up a PayPal account. From there, you can either 1, buy Bitcoins online, 2, acquire Bitcoins as a payment for goods and services, or 3, earn Bitcoins by completing tasks. When you use option 1 to buy Bitcoins online, you use a system called Bitcoin Exchange, which is much like foreign exchange transactions. You trade your local currency for Bitcoins to be transferred to your Bitcoin wallet. Now, if you desire to approach Bitcoin transactions through a business, then you should explore option number 2. You can offer your business's goods and services in which the payment is a Bitcoin transaction that is verified in 10 to 20 minutes. Option 3 involves no money from your wallet. A way to earn Bitcoins is by completing tasks on websites. Some companies will pay you in Bitcoins to test their websites, take their surveys, retweet their posts, and complete other small tasks. You can probably just Google something like how to earn Bitcoins, and I'm pretty sure several websites will pop up. But before you invest in Bitcoin, make sure you weigh the pros and the cons. Yes, Bitcoin allows its users to be in full control of their money. It's possible to send and receive Bitcoins anywhere in the world at any time. No bank holidays, no borders, no bureaucracy. But many people are still unaware of Bitcoin. It's not accepted everywhere. The list of businesses that accept Bitcoin remains small and still needs to grow in order for everyone to benefit. It also doesn't seem to have really caught on much in Jamaica. But if you're doing international trade, it may be an option. Bitcoin transactions are secure, irreversible, and do not contain customers' sensitive or personal information. But because of this, cyber criminals may be able to exploit cryptocurrencies in an effort to launder money. However, because all transactions are displayed on the blockchain using cryptocurrencies on money laundering and other crimes, is reported to be pretty sparse in comparison to cash transactions. Bitcoin has the most brand recognition easily, liquidity, and the most developed ecosystem of the various cryptocurrencies. But Bitcoin, like all cryptocurrencies, is still experimental and subject to much more volatility than many tried and true investments such as stocks, bonds, and mutual funds. With the current situation of the pandemic, the emphasis on exploring newer and more innovative ways of acquiring money presents a spotlight for digital currencies. Tomorrow's Halving event shows how time has increased the value of Bitcoins. So, is this the time to change your cash into digital bucks? What do you think? Leave your thoughts in the comment section below. Have you ever invested in Bitcoin or cryptocurrency? What was your experience like? And if you're looking to do it, what are your concerns? I'm Kalila Reynolds, and that's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. Follow them on social media at We Are Proven, and follow me on Twitter and Instagram at Kalila Ray. And of course, hit that thumbs up button so that YouTube shows this video to more people. Subscribe to this channel to learn more each week. Turn on those post notifications, and hey, if you've learned anything useful today, share with a friend. Stay safe. Coming up on Taking Stock. First up, data insight firm Blue Dot buys back SSL Venture Capital's 50% stake in the company. Why? We'll find out from founder and CEO Lauren Peart. And later, the analysts weigh in on the latest market developments. The Jamaican dollar has slipped even further against the US, trading last week at $146.10 to $1 US. How is this impacting business? And key insurance stock price jumps over 300% in 1 month. We'll discuss.